Alrighty. Hello and welcome to the Crane Connection. I am your host, Sarah Snell Cook. I'm here today with Uid Ziv. Welcome.
Thank you. Thank you for having me. It's a pleasure.
And he is the CEO at Personetics. Why don't you tell us a little bit more about yourself and the company?
I think the company is more interesting, but I will say a few words about myself. I've been doing enterprise software, enterprise application for over 30 years, serving multiple industries. But I would say in the last 10, 15 years, focusing on financial institutions and then specifically on the fascinating kind of touch point between the data financial institutions have, understanding their members or customers, and making sense out of it in order to help, at the end of the day, the end consumer that is being served by a business. And obviously, this is very much fit for what Personetics is doing as well, or what Personetics is doing as well.
hmm Yeah, so you all are involved in cognitive banking. Why don't you tell me what the heck that is? Tell everybody what the heck.
Good question. Maybe I'll start by the reason for cognitive banking, and I'll get to what it is, but I think it's more important to understand the rationale. And with that, I've joined Personetics a little over a year ago. Company's been around for almost 15 years. And when people ask me what attracted me to this company, we have a great business, but I think way before I was fascinated by the business itself and the metrics of the business. The vision of the company is fascinating, and the vision is to democratize financial wellness for all people worldwide. And if you think about it, only between 1% and 3% of the world population has the privilege of getting financial advice from either their financial institution, credit union, bank, and others, or from an independent if they're really wealthy. But what about the other 97 to 99% of the people? That's most people. Most people we know don't get the privilege of getting advice, and finance is complex. And we just ran a survey over a few thousand people. Globally, we are a global company. We serve financial institutions in over 30 countries. We ran a survey with consumers, with the members, and asked them several questions about what's of interest to them and how their financial institution is serving them. But one specific answer was fascinating. Over 50% of people said financial wellness is more important to them than, and I'm serious,
hmm
health, family, relationships, etc. Now, when someone is ill, obviously that's more important than anything. But in their mindset, it's so complex and so significant to their day-to-day life that it's the most important thing, and it's very complex. And going back to our vision, the vision to democratize financial wellness for all people worldwide is a fascinating vision, and it really attracted me. It's because if we can help people make sense out of it and be smarter about their financials and take smarter action, that will do a lot of good. And this is the core of what Personetics is, and it's the root of cognitive banking. Because when you think of that vision and you think how credit unions and other financial institutions mostly serve their customers, there's a very significant disconnect. And the disconnect is that we've all been, as people, we've all been conditioned, trained, shaped by Amazon, Netflix, Spotify to be served in a certain manner. Now, when I go around the world and I talk to people and ask them, how many of you think your financial institution is serving you the way Amazon is, or Netflix, or Spotify, and many others? And most people say, oh, come on,
hmm
obviously not. And when I ask the question of what is the main difference, it kind of highlights something very, very basic. All of the brands I've mentioned, Amazon, Spotify, Netflix, and others, basically do very simple things. It's complex to do, but it's easy to understand. They looked at a lot of data to basically understand Sarah or Udi or anyone else. Then they provide personal useful, and useful is a big word, informations that is easy for me to consume. They understand my current needs and also predict, depending on the service, predict my future needs, which is a little more complicated and is more valuable. And then with a click of a button, allow me to take action. That's all they do. And if you think about all of these things, now why are we fascinated by them? Because that's exactly how we want to be served. By the way, the last thing they do is actually they learn from our action or lack of action to make the next cycle smarter. But really, that's what it is. Now, if you think of your financial institution, mostly they don't do that. They may show me some financial information, mostly about my transaction, maybe allow me to pay bills. Fine, it's important, but that's not very useful. They don't help me make sense of my finance. They definitely don't help me understand my current needs, and definitely don't predict my future needs, and don't allow me to act with a click of a button. And that's a disconnect. Now we're all frustrated by that because we've been trained and shaped and conditioned to get service that way, but it's not how we were being served. And the most important thing in our life, which is financial wellness. And this is the birth of cognitive banking. Cognitive banking is actually the combination of two different disciplines that every credit union and other financial institution fully understand. One is called engagement or personal financial management, which is the basic sharing of financial information with your member. It's a must, but it doesn't bring a lot of value, and everyone does it. So that's one category, one discipline. And then there's another category, another discipline, which is called, let's call it the next best offer category, which is campaign management products that basically have a product in mind, let's say a loan, and now that loan is looking for a segment of customers, members, that are a good fit for that loan. And then they send a banner or an email or something of that nature. These two things are disconnected. It's different vendors, almost different buying individuals within a credit union. Now the world operates and everyone thinks it's great, but is it? From a member perspective, that's not how we are used to consume services. We want the whole thing to be a single continuum. We want the financial institution to fully understand me, yes. We want them to present useful information, sure, but it doesn't stop there. We need them to understand our needs, predict our future needs, and then allow us to act. And cognitive banking is the marriage of these two disciplines together. The engagement, the wellness, and the what we call needs-based offers in context in a single continuum. That's probably the best definition. Now, for a solution to be a cognitive banking solution, it basically needs to follow the exact same thing that Amazon and Netflix are doing. Look at all your transactions, understand, make sense out of them. That requires a lot of AI, of course, with the magnitude of transactions. Then present to you not your list of transactions and buttons to say you can press this to pay your bill. That's sure, but give me useful information. Give me things that are digested in a way that I understand why you're showing this to me and what is the meaning of that. And I'll give some examples in a sec. Then they need to understand my needs, current needs. What is it that I may need now from a financial perspective? And then, more importantly, predict what will be my needs tomorrow, next week, next month. And then in context, allow me to act. And add learning to that, the kind of the positive feedback loop. That's all that cognitive banking is about. And when a financial institution applies that, there's significant value, which we can talk about. But I'll pause here, see if there's other questions around this.
Yeah, well, actually, you started to answer it. What is the major benefits to the institution as well as the consumer? And if you have some examples to share, I'd love those too.
Okay, so let me maybe start by sharing a couple of use cases and then talk about the value that they bring both to the financial institution and to the member. So just kind of remembering what cognitive banking is all about. First step is analyzing all of your transactions to make sense out of the data and to fully understand your financial profile. Obviously, a lot of AI is involved in that. Second step is to present useful information in a personal manner. And then it goes into identifying current needs and predicting future needs. And I want to give example of each one of these. So let's talk about current needs. One of the hottest topics is subscriptions. We all have many subscriptions. At least I don't remember quite a few of them. So it's very useful for people to get a list out of the full transactions that they have. You get a list of here are your recurring subscriptions. That's very helpful. But even more helpful if I can identify that 2 out of these services are of a similar service. Let's say Spotify and Apple Music. Both are music streaming. Now, I may have done it on purpose, and I may have forgotten that I had Spotify, and I'm still paying while I'm only using Apple Music. So that's becoming even more useful to basically identify not just the subscriptions, but also the discrepancies. Now, making it even more useful is if right next to the list of subscriptions and pointing out that you may have a duplicate is to give you a little button that says click here to initiate canceling that. And that is the marriage of identifying a need in a useful manner and allowing you immediately to act upon it. So that's one basic example which is very valuable and explains the need for cognitive banking, the need for the continuum between understanding data, presenting it in a useful manner, and allowing you to act. It becomes even more interesting when you talk about predicting future need. So let's say my balance in the account is positive, but let's say, I don't know, $2,000, which is fine. And if I see that, all's fine, I move on. But wait a minute. We can analytically, by looking at your transactions, looking at your pattern of expenses in the past and pattern of income, we can predict that within 7 days you will be running out of cash and getting into an overdraft situation, you as a member. Now, presenting that to me in a nice visual manner is very useful, because if I know that I'm 7 days away from being in an overdraft, I may want to do something about it. Putting a button right next to it saying click here to get a bridge loan, that is not just very useful, it's also basically saving me from an overdraft situation. And that's the example again of predicting future needs, but immediately within cognitive banking, this continuum from showing you just very useful information to allowing you to act and closing the loop. Now, when this is applied, and you asked about the value, we call it the magical win-win. 2 things happen. And I'll start by talking about the financial institution. They see a very significant increase in business on multiple dimensions. This could be digital sales, which is always a challenge. We have customers reporting 10% increase in digital sales just by that approach. By showing useful information, allowing you to act in context. We see, again, from customer reporting value, 5 to 10% in account balance growth, actually getting more funds into that. Improve retention, significant improvement in retention. The fight for primacy is probably a very significant challenge that all financial institutions are facing. When you're giving the member that type of experience, they'll stay. And the digital engagement, which is measured by how often do you go into your application or website, how often do you interact with the insights you're being shown, is growing by, again, reporting what customers are saying, 30-40%. That's extremely significant from all perspectives, short-term financial gains and longer term, meaning lifetime value, retention, etc.
Mhm.
And customers are happy to report. Our customers, credit unions and financial institutions, are happy to report that. But that's only the first part, because I think the biggest benefit at the end of the day, which creates the flywheel effect, is that their members, and we have 150 million people that are being served by our cognitive banking, the Personetics cognitive banking, their members are basically rating their experience. Every single insight that is shown on the screen has a built-in rating mechanism, and the member can go in and say 0 to 5 stars, how happy they are with that, what they've seen. The average score across 150 million people worldwide is 4.6 out of 5.
Mhm.
4.6 out of 5 in banking or in financial institution is almost like science fiction.
Mhm.
Uh, and that's incredible news, because when members are so happy, they want to do more. They want to spend more time in the application. They choose to use this credit union's service versus another app that they have on their phone or another website they can go to. And that's very, very significant. And this combination, any business that can say this, that has this win-win effect, that the business is thriving and its customers are thrilled, it's bound to be successful. And that's exactly the experience financial institutions are getting when they're using cognitive banking. And it's not surprising, because this is exactly what their members want, and it creates the need or the action from the member that drives business, and that's the end result that we're seeing, or our credit unions and other financial institutions are seeing.
Yeah, it sounds like you're talking about open banking to be able to get all that data about different or members with funds other places. Um, and so when is that? What do you see where it looks? I'll start over. What is the um, trend you see? When are we going to actually see open banking in the US?
Yeah, well, you're absolutely right. Open banking is a very significant benefit to cognitive banking, and just to maybe in a couple of sentences explain why. The concept of cognitive banking starts by fully understanding your financial profile. Using a lot of AI and other analytics, that's fundamental, because only when you fully understand the financial profile, you can now present useful information and understand needs and predict needs, etc. A member's full financial profile is not built out of a single financial institution's transactions. Nowadays, many of us have multiple financial institutions that we do business with. And just having a siloed understanding of a single credit union transactions of a member may give a very skewed understanding, which is true for that credit union. But if I'm in an overdraft situation with this credit union, obviously I may be offered a loan, but I may have hundreds of thousands of dollars elsewhere, so I definitely don't need a loan. So open banking is a very significant factor in cognitive banking, and for us, any country, and we serve many countries that has open banking, our customers, the financial institutions, are gaining even more value.
Mm-hmm.
And basically, they get the full picture. Therefore, they present the most complete financial profile with the most useful information to their members,
Mm-hmm.
and allow them to be smarter and offer smarter things for their members. Having said that, most countries don't have a sophisticated open banking environment yet, and in countries that in Brazil or in the UK where it's more advanced, there are definitely very significant use cases, but also in the US, we have customers
Mhm.
that financial institutions that have fairly sophisticated open banking strategy, and they use the Personetics cognitive banking in order to basically take advantage of the broader understanding of the member, all the way to the point. I'm not going to mention the financial institution name. That what they're basically doing, they identify opportunities within other financial institutions and basically suggest to the member alternative services that basically move funds from the other financial institution to this specific one, which is the holy grail of what they want to do in terms of primacy. Um, so it's definitely relevant. It's coming because it's good for the members. It's good for the consumers. Um, I think it's slower than in the US than in other markets, but it's definitely coming because it brings value, and anything that brings value eventually happens.
Yeah. Yeah, and I was wondering because you were talking about, some institutions taking advantage of opportunities they see to offer an alternative service. And so some executives are a little concerned, hey, they're going to be picking off my members or whatever. How do you get around that kind of thinking or over that kind of thinking?
Yeah, look, first of all, you're right. A financial institution that is not going to play the game and basically not going to try to get their members to allow them via open banking to get information from other financial institutions will not have the upper hand because they'll have less data and therefore less understanding, and they will mostly fly blind. Or fly siloed, if I not completely blind, and they're definitely not going to have the upper hand. But it's
Mhm.
all, members have to. Open banking is an elective service. You
Mhm.
have to opt in to open banking. You have to allow your financial institutions to get access. And my point, and we're helping. By the way, we're helping financial institutions uh, explain the value via
Mhm.
our insights. We explain the value to the members of why is it good for you, the member, to actually allow your financial institution, your credit union, to get financial data from other institutions. Mostly because I, the credit union, will understand you better and and be able to help you better.
Mhm.
But it's all, the member can choose. And if they don't want to do it, it's not done. If they want to do it, if they understand it's valuable, they will opt in, allow you to do it. And then, eventually, and they will measure, are they getting anything valuable out of this theoretical exposure that they're willing to give you. And in most cases, there's so much value out of it.
Mhm.
That once people do it, they keep doing it, and
Right.
it's again, it's good for everyone.
And so, what are the trends that Cranes should be watching for around this, everything we've talked about today?
Yeah, I think the biggest trend is that members, consumers have a choice. There's surveys. I can quote a few. JD Power is saying there's a 60% increase in the last few years in account switching, something the industry had never seen. Accenture, in one of their studies, said that overall, over the whole population, 59% of the people they surveyed bought a financial product from a new financial provider, meaning not from their main financial institution.
Hmm.
And when you go to Gen Z, same question, 82%. So basically, people are, exercising the choice they have, and they have a lot of choice. All the way, by the way, to again, JD Power saying 13% of the people they surveyed, and it's a phenomenal number. 13% of the people they surveyed said in the next 12 months they're likely to switch financial institution.
Mhm.
That's an enormous number that the industry had never seen. In our own survey, I mentioned before, a few 1,000 people worldwide, asking them about what are they expecting from their financial institution. 84% of the people we surveyed said that they will
Mhm.
consider switching financial institution to get personal service, the Amazon, Netflix, Spotify type of service. These are numbers that the industry had never seen. It's probably the biggest disruption in the industry's history.
Yeah, I remember 15,
People
20
have
years. Oh, I'm sorry. I was going to say 15, 20 years ago, I remember people creating switch kits because members would complain how difficult it is to change institutions. And now, yeah, big difference.
It's a click of it's a click of a button.
Mhm.
And the younger generations, I mean, 59% bought a financial product. These are full population. That's a lot. It's almost 60% of the people experimented at least in the last 12 months with a different financial institution. 82% of Gen Zers. It's almost everyone. Uh, People have choice, and people are exercising the right to choose. And if which to me is the biggest earthquake this industry has ever seen. It's not about technology. Technology is maybe an enabler that can fight this or help financial institutions overcome this. It's a societal disruption,
Mhm.
and a financial institution, large or small, that will not pay full attention to the fact that their members have a choice and not spend significant cycles around what am I doing to differentiate? What am I doing to basically, when they do have a choice, they will mostly choose me
Mhm.
versus others. We'll see, some tough times, and so I think that's the biggest trend,
Mhm.
which an inertia, which most organizations by definition operate under some sort of inertia. Inertia is just not going to make it. And even if a financial institution that will say, I've been doing the same thing for 20 years, why wouldn't it work the next 20 years? The answer is that they have different members, they have different consumers. Maybe the same people, but we've been trained and conditioned to expect something different, and we have choices.
Yeah.
And if they don't adopt a cognitive banking approach, from Personetics or from others, I guess, they will not be able to maintain the upper hand. And it's true for the largest financial institutions, and we serve some of the largest in the world. But it's also true for the smallest community bank or credit union, because digitally they all compete
Yeah.
for the same space on my phone or website.
Mhm.
And again, I have a choice as a consumer or as a member, and that's the biggest concern, but also the biggest opportunity for the ones who pick it up quickly.
And credit unions are democracies, so hopefully they understand people have a choice. Obviously, that's the point, right?
Yeah, and maybe closing the loop on our vision in credit unions, democratizing financial wellness.
Hmm.
You know, what better vision is there for credit unions, right? I mean, it's all about taking care of the members. And yes, while doing this, you create a good business, but
Hmm.
it's all about, am I helping the members basically almost get wealth management for free?
Right. So I always let my guests have the last word. So what are your final parting thoughts, Udi, of all the things we've discussed today?
Yeah, look, I think the it's a fascinating time in the industry. I think an industry that has been around for thousands of years. I've seen, empowering world events as well as all of our day-to-day lives. I think, and the industry has seen disruptions in the past. I think there's never a similar magnitude of disruption, never. And I think, you can look at it two ways. You can panic, or you can say, "Wow, such an amazing opportunity to make a significant change, and eventually to the better of your members." And I think the financial institutions that that take this as an opportunity are in for a very exciting time where the whole industry is going to shift. Not because it's going to have different products or different interest rates, or maybe that will happen as well, but because the whole dynamic with how they work with their members is going to be changing forever, and it's extremely exciting. And I'm glad Personetics and our cognitive banking solutions are, we think, at the forefront of that opportunity in the market.
It was a powerful opportunity for credit unions and those other guys. Thank you so much today. I appreciate your time, Udi. Thank you for joining me.
Yeah, absolutely. It's a pleasure. Let's fight for credit unions.